Hello everyone, welcome back to Rise Finance. In today's video, we are going to talk about the basic need of savings and where to start investing in case of you are a new investor. Let's check it out. First and foremost, saving money is important because it helps protect you in the event of a financial emergency. It can be anything from a family emergency that requires you to fly across the country to less emotional one like a broken down car. Seriously, money should be the last thing you need to be worrying about during an emergency. Many people think saving money means they'll have to give up on the fun things, but that's not correct. Budgeting your expenses such a way that there is room for savings and fun is always good. Truthfully, you should always set a little money aside for enjoyment. And when you have savings, you can enjoy guilt free and without having to worry that you're harming your financial future. Saving money is important because it provides you with financial security, and the more you save, the more secure you will be. Do your future self a favor and save up an emergency fund. Hopefully, you'll never need to use it, but if you do, you will be grateful that it's there. Think about it. Without savings, how will you face any financial storm? Without investments, how do you plan to make money when you're too old to work? If you lose your job, will you be able to pay your bills? You'd have seen I used savings and investments in one line there. Yes, savings is just not enough. We need to know about an important term here, and that is inflation. In common words, inflation is an increase in prices for goods and services that we commonly use. An example I use here is for grocery prices that have constantly risen over the past year. Let's take a quick look at this article from NBC News, which tracks the grocery price trends. What we see here are the price increases of all the basic groceries that we purchase regularly from November end of 2020 to almost end of December 2021. So what do we see here? Almost an increase in prices to the range of 5 to 20% across your juice, eggs, poultry, bread, etc. And currently, we are in an environment in which inflation is rising the fastest in over 3 decades now. What do we see here? If you observe carefully, the inflation is beyond 6%. That means you're paying 6% more for your goods and services now than you were doing an year ago. Inflation is eating into your money. Let's take a quick look at a few articles about how much the Americans are saving. What do we see here? Americans lack savings as a result of poor financial education. Yes, that's true. Financial literacy is very, very important. 2 in 5 Americans have less than $1,000 in savings. That is a point of concern. And 21% of working Americans aren't saving anything at all. If you take a look at this graph, what do we see here? 21% save nothing. 5% less than 20% of an annual income. Less than 10% makes up 28%. So this is less. Ideally speaking, 25% of annual income should be saved. In the same article, we can see the biggest reason that people aren't saving money. Expenses make up almost 40% of their paycheck. Debt and other things make up certain other percent. So with that said about savings and inflation, what is the best way to, to manage money? If your answer was savings accounts, then you might be wrong. If you look here, what is the national savings account interest rate? 0.06%. And if you look at what is the rate of inflation now, we are at 7%. So if anyone having money saved in their bank savings account should do a quick check if that is a prudent investment. Your money in the such accounts is losing out to inflation, which like we just said is about 7%. The only way to beat such thing is investing prudently. As I have discussed in my previous video, journey for a new investor can be overwhelming to start with. and index investing is an ideal way. An S&P 500 index fund just fits correctly in this area. Now let's talk about this amazing investment vehicle called Acorns. Acorns is an app that automates investing for its users. It invests in the broad market funds that track the market that I mentioned earlier in the video. Acorns being a robo advisor, which means they ask you a certain list of questions like your age, how long you like to stay invested, your risk criteria, and so on. Based on the responses, it suggests you one of the curated portfolios that have predetermined funds to invest your money in. It can range from a conservative one, which invests only in bonds, to the aggressive that invests in stocks that offer you higher growth potential. You can start investing in Acorns with as little as $5. What you see here are the list of portfolios which Acorns provides based on your responses. The first one we see here is a conservative one, which mostly consists of bonds. These are mostly for people who would like to invest for a shorter duration of time, those who are already retired or closer to the retirement age. But slowly, let's say your investment lifespan keeps increasing, so does the portfolio that Acorns provides. So as you can see here, as the portfolio goes from conservative towards moderate and more aggressive, the type of ETFs that the portfolios contain keeps changing. You will see here the S&P index funds coming into picture, the WU. Remember, we spoke about this in our earlier video and also just a while back. And we have a few ETFs which deal with the medium and the small company stocks, and the one which also deals with international companies. And in the aggressive one, we see complete stock-based portfolio. So you have the WU, we have the medium companies, and we have the small companies, overall counting to around 70% of the local portfolio. So these are all US based stocks, whereas 30% of your portfolio will be international. Having your portfolio split among local and international is always desirable because you never know when the US market would go down and when the international market would go up. So this kind of portfolio gives a 70-30 balance of US and non-US based companies. The unique selling feature about Oicons is what they call roundups. It allows you to invest the spare change from everything you spend by rounding up every purchase to the nearest dollar and investing that difference. So say you spend $3.50 on a cup of coffee. You let Acorns let round that purchase. You let Acorns round that purchase to $4 and invest that 50 cents difference. So with the number of purchases you make, you can see the small differences add up. And when they total $5, Acorns then invests it on your behalf. Acorns also has a roundup multiplier option, which lets you multiply the roundups by twice, thrice, or 10 times. So if you had the option set to 10 times, and with the earlier coffee example, that 50 cents turns to $5 that Acorns can then invest. Consistency is the key to investing. Acorns lets you set up a recurring investment on a daily, weekly, or monthly basis. What this does is lets you dollar cost average your purchases. We spoke about dollar cost averaging in our last video and we saw the benefit that it provides. Acorns also has this feature called Acorns Earn. What Acorns does is it has tie up with multiple brands. So if you shop in any of these brands using the cards that you link to your account, then you get certain percentage of your purchases like a cashback, and that cashback adds up into your regular account balance, and whenever it reaches $5, it gets invested. You also get an Acorns checking account with all these benefits. One that strikes out mostly is the fee-free ATM that you can use, which is a nifty feature to have. You also can open an IRA account with Acorns. IRA is your individual retirement account. You can also open an investment account for your kids with Acorns Early. Coming to the fee part of using Acorns, it charges $3 per month for the personal side of the account, which includes the invest, the later, and the banking. And if you want to open the early account for your kids, then that comes into the family tier, and that's $5 per month. I do agree with even $3 per month fee for the personal account, which accounts to around $36 for the whole year, is slightly on the higher side. And you may argue that you may as well invest in index funds all by yourself into any other brokerage account. But the ease that Acorns provides with giving you this roundup feature with the auto invest and stuff, I feel it's well worth it. Anything auto investing, I'm all up for it because that takes away the human involvement element out of the picture. You open your account, set it up the way you want it to, and just let it run. Using Acorns is way better than doing nothing. For someone who is just new to investing and not well versed with the market, Acorns is the best option in my opinion. What you see here is my personal Acorns account. I use the invest feature of Acorns. As you can see here, I have almost $3,900 invested. Mine is a aggressive portfolio in which I have set up a $10 recurring investment every Wednesday. My roundup settings are again automatic, and currently I don't have any multiplier option. You can see here as part of my recent activity a roundup investment of $5.17 and recurring investment, like as I said, just showed you earlier, a $10 investment every week. And let's look at the performance of my investments. So I started my Econs account in late 2017. So that's just over 4 years now. You can see here it's late 2017 and it has done pretty good. So this steep fall that you see here is during the COVID pandemic crisis in early 2020. There's a deep fall. You can see here my portfolio almost went from 1300 down to almost 900. So that's like a drop of $400. But I didn't give up. My investments kept on pouring in. And what happened after that initial shock of the pandemic was that markets just rebounded in a spectacular way. And so what that did was my investments just kept on coming and growing with all their dips and spikes all the way through. What you see below the chart is the split of the entire portfolio into the large, medium, small, and the international company. So you can see here 55% in the large company stocks, which is the WU, the main S&P 500 index. The medium company stocks is almost 10%, small company stocks is almost 5%, and the international is just over 30%. If you look at the shares, I have almost 5 shares of the WU, one and a half of the medium, just over one and a half of the small, and like almost 17 shares of the international. You see, this is the simplicity that Econs gives me. It just lets me pick what I want and it invests on my behalf. You can also do a one-time investment. Let's say if you had some extra cash at some time and you just wanted to invest into the market, you can do it here. This is the Acorns earn feature, which I was referring to earlier in the video. So what Acorns has done is it has tied up with multiple companies. And when you make purchases at any of these participating companies using the card you have linked to your account, you get a certain percentage of the purchase as a cashback, and that accumulates into your Acorns balance. And once that reaches your $5 minimum amount, Acorns will invest on your behalf. I think this is a nice feature that Acorns provides, which everyone can make use of. Acorns also lets you see a futuristic projection of your investments. Here you can see what your investments would look like if you continue investing regularly. So in this case, you can see my recurring investment is $10 every week, and my roundups are on. And let's say by age of 52, I would have $30,800 in my portfolio. Likewise, I can just change the slider. By age of 60, with the same settings, I would have almost $58,000. And if I wait till 67, that's almost $95,000. So see, it's just simple maths. Just keep investing, be regular at it, no matter how small it is. Here in Acorns, you can just invest as little as $5 of your own, and your roundups anyways come into effect. Your investment need not be a jargon. It need not be rocket science. Acorns keeps it simple, which is how it's meant to be. If you are thinking of signing up for Acorns, I will have my referral link in the description notes below. You get $5 to sign up. This video is not sponsored by Acorns. I've been using this product for over 4 years now and really like it. It keeps me invested, even without knowing I'm doing it. What more do you want? Thanks for watching. Please like and subscribe to my channel. to keep informed about all such informative videos in future. I am not a financial advisor, and all the content you would see in this channel is for educational and entertainment purposes only. Everyone should do their own due diligence before investing their hard earned money. Thank you.